Hi there, and welcome to another Stock Insights video on Stock Market Palantir. Make sure to hit the subscribe button and drop any comments. Now, let's go for the analysis.
Okay, so as we're talking right now, above food ingredients, ticker ABVE, is consolidating. It's in this surprisingly tight, sort of coiled range between $2 and about $2.44. But if you look at the tape from January 7th, just a couple weeks ago, you saw a flash of what this thing actually wants to do. We saw this intraday spike of 37.43% on volume that surged to nearly 4 times the daily average. And that was purely on the confirmation of an audit timeline. I mean, that kind of price action, it tells me somebody knows something.
It wants to move, I'll give you that, sure. But, volatility isn't the same as value. And a little bit of panic buying isn't the same as actual due diligence. We are looking at a micro-cap plant-based food company valued somewhere between, $105 and $127 million that is trying to pull off, maybe the most audacious pivot I have ever seen. They are effectively abandoning the lentil business to become a sovereign asset-backed fintech player through a merger with Palm Global Technologies.
It is audacious. But that's exactly where the asymmetry is, right? You don't get 10x returns buying Coca-Cola. So the real question we're debating today is whether ABVE is the ultimate Trump trade proxy, a moonshot backed by real geopolitical power, or if this is all just a mirage. I'm looking at this as a mispriced option. I think the market is completely ignoring the massive implied value of this merger and, the strategic backing of Aqua One.
And I see a quote-unquote special situation that is just riddled with red flags. I think this is a dilution trap. The so-called assets they claim to have, I think they're probably unverifiable confetti. And the corporate structure itself feels like it's designed to dilute retail investors straight into oblivion. You see a moonshot. I see a survival play for a distressed food company that just found a new buzzword because the old one, plant-based, stopped working.
Well, I see why you'd frame it as survival, especially given the state of the plant-based sector. We've seen peers like Benson Hill and Beyond Meat get absolutely decimated. But let's look at the actual position here. This isn't just desperation, it is a necessary evolution. Above Food isn't dying, it's pivoting to high-margin fintech. And crucially, they are not doing this alone. They have a $20 million investment from the Aqua One Foundation.
We need to be very, very careful with how much weight we put on that $20 million figure. In the grand scheme of sovereign finance, $20 million is surrounding error.
But it's a matter of record, and in the microcap space, it's a lifeline. But the implications matter more than the dollar amount. Aqua One is the largest backer of World Liberty Financial, right? The DeFi project launched by Donald Trump and his sons. So by extension, ABVE has become this unique NASDAQ-listed vehicle for exposure to crypto deregulation. You can't just easily buy World Liberty tokens right now. It's complex, there's KYC, but you can buy ABVE on Robinhood. And right now, buyers are stepping in at that $2 price floor. That is a real psychological support level.
Buyers are stepping in or are shorts covering. We can get to the plumbing of this thing in a minute because I think the market structure is telling a very different story. But let's just address my core position on the math. You're talking about political legitimization. I'm talking about basic arithmetic. The merger with Palm Global, it involves issuing 1.1 billion new shares. Let's do the dilution math just so everyone understands the gravity of this.
It's a large issuance, granted.
Large is an understatement. If you price those 1.1 billion shares at the current $2 market price, the implied pro forma valuation of this company is $2.3 billion. That's unicorn territory.
Which would be a 20x return from here. That's the whole thesis. You're buying a $2 billion company for $100 million.
Or it's a complete fantasy. The market is currently discounting that merger consideration by roughly 95%. That tells you that the smart money assigns a near zero probability to this deal's success, or they believe the shares will be worth pennies once that supply hits the open market. And you have extreme opacity with the partners, and let's not forget the audit overhang. The auditor resigned in mid-2025. That is usually a disqualifying risk for any serious institutional money.
Look, institutional investors are often late to the party on special situations like this. Their mandates prevent them from buying until the dust settles. That's the retail edge. If you wait for the audit to be filed and the headlines to break, the stock is already at $10. Let's dig into the core of the bull case, which is the business relationship.
You're dismissing Palm Global, but look at the super app narrative they're building. It's agritech plus fintech. More importantly, look at the joint venture with Promax United in Abu Dhabi. They are claiming access to $1.5 trillion in sovereign assets.
Claims are cheap. Anyone can print a PDF saying they manage $1 trillion.
But signals are expensive. They appointed His Highness Sheikh Mohammed bin Maktoum to the board. You don't get a member of the Dubai royal family to lend his name to a confetti scam. That appointment is a signal of legitimate UAE royal patronage and, crucially, regulatory access. That is the bridge.
I'm sorry, I just don't buy that a royal board member validates the balance sheet. Royal family members serve on hundreds of boards. It doesn't guarantee the gold is in the vault. And we have to look at the numbers they're claiming. Palm Promax Investments claims to hold $350 billion in gold-backed assets. Do you realize what that number implies, physically?
It implies they have significant backing. It implies they have the collateral to issue a stablecoin that actually stays stable.
No. It implies a statistical impossibility. Let's put $350 billion of gold into perspective. That is roughly 4,500 tons of gold. That would make this private JV the holder of the second largest gold reserve in the world. Larger than the IMF, larger than Germany, the only entity with more gold is the United States government. Are we really supposed to believe that a microcap's partner has unencumbered access to that much bullion without it being front-page news on Bloomberg every single day?
It doesn't have to be physical bullion sitting in a vault in New York. These could be unmined reserves, sovereign guarantees, in-ground assets. The valuation models are different, but the collateral value is still there.
Unmined reserves is just a polite way of saying dirt that might have gold in it. It's non-performing, and look at the digital footprint of the partner, Promax United. Their website uses generic stock imagery. Reviews for Promax trading are mixed at best. This doesn't look like a firm managing trillions. And then there's the Burkina Faso deal,
which is a concrete deal to launch a gold-backed stablecoin. That's a nation-state contract.
It's a deal with a military junta. Burkina Faso is under military rule, pivoting toward Russia. Partnering with a junta is practically unenforceable. If the regime changes or if sanctions hit, that contract is worth zero. You are asking investors to underwrite political risk in the Sahel. I mean, this isn't banking, it's geopolitical gambling.
High risk, high reward. That's the definition of this kind of play. But let's look at why the stock acts the way it does. The market microstructure. This thing is a coiled spring. Short interest has climbed to 1.15 million shares, up from about 276,000 back in November.
The short interest is rising, yes?
It's rising as the price rises. That's the divergence. The shorts are fighting the trend, and any positive news, like the audit confirmation, triggers these violent squeezes. The float is tight. One more catalyst, and everyone shorting this is going to be vaporized.
The float is tight, but you need to look at where the shorting is happening. I've looked at the dark pool data. 56.42% of the short volume is off exchange. That's a massive anomaly.
Which means institutions are hiding their hand. They don't want to show their cards on the lit exchange.
No, I think it implies something much more specific. It's likely convertible note arbitrage. You have note holders, probably including Aqua One, who hold debt that can turn into stock. So to lock in a profit, they engage in what's called boxing the position.
So walk me through the box trade.
Sure. They short the stock in the dark pools. At the same time, they hold the long convertible note. If the stock crashes, they make a fortune on their short. If the stock skyrockets, they just convert their debt into shares to cover their short. It's a risk-free trade for them. They are not betting the price goes down. They are locking in a profit regardless. This isn't a setup for a squeeze. It's a setup for suppression. They're selling every rally.
I disagree that it's just suppression. If it were, we wouldn't see the cost to borrow spike the way it did.
You mean the spike to 728% back in August?
Exactly. For anyone listening, cost to borrow, CTB, is the interest rate you pay to borrow shares to short them. For a stock like Apple, it's maybe 1%. When it hits 728%, it means there are no shares left to borrow. The plumbing was broken. And now we have this clear resistance level at 250. You call that a ceiling, I say that's the Aqua One note conversion price. Once we breach that wall, the squeeze could be massive.
Or, once it hits 250, the supply floodgates open and the price is capped forever. But let's step back and talk about sentiment. You mentioned the Trump trade.
It's undeniable. The price action of ABV correlates directly with prediction markets like Polymarket, specifically the contract for presidential election winner 2028 Trump influence.
So it's a meme stock, it's trading on vibes.
It's a high beta proxy, and it also correlates with world liberty financial success. But here's the critical distinction. WLFI is a token. It's hard to custody for a traditional fund. ABVE is on the NASDAQ. It's the infrastructure play. It's the bridge between the chaos of crypto and the regulation of Wall Street.
That is a massive if. And comparing it to the broader Trump trade basket just exposes the weakness here. Look at Trump Media, DJT. It has a $4 billion valuation on basically zero revenue.
Exactly. That shows the potential upside. If DJT can be worth $4 billion on zero revenue, ABVE can be worth $2 billion on a $1.5 trillion asset claim.
No, it shows the difference between a pure meme play and an infrastructure play. DJT trades on fan loyalty. ABVE is trying to be a financial rail. Financial rails require audits. They require trust. They require verification. You can't run a bank on just hype. If that whole Trump trade basket loses momentum, ABVE has no fundamental floor. The food business is distressed. There is no safety net.
I think you're ignoring the pivot premium. Let's look at the peer comparison. Look at Benson Hill.
It's down effectively 100%. It's a failure.
Right. And Above Food was in that same bucket. But look at ABVE's performance relative to the food sector. It's significantly outperforming because the market is pricing in the pivot. It has decoupled. The market is saying, we value the fintech attempt.
The market is speculating, but look at the governance red flags. That auditor resignation in July implies disagreements over accounting.
They have a new auditor. It's resolved.
But why did the old one leave? In these types of deals, an auditor walks because they can't sign off on the asset valuation. They don't want the liability. And look at the ownership. Institutional ownership is negligible. No Vanguard, no BlackRock. It's 28% private companies and nearly 10% insiders. This leaves retail holding the bag if that January 31st filing deadline goes wrong.
The institutional absence is exactly why the opportunity exists. By the time BlackRock is buying, the stock is at $20, not $2. So let me summarize the bull case. We're approaching a singular date, January 31st, the audit filing deadline.
It is the moment of truth.
If that audit is filed and clean, the NASDAQ compliance overhang vanishes. The merger can close, and we unlock the multi-bagger re-rating toward crypto valuations. The connection to Aqua One and the Trump ecosystem provides a unique tailwind that standard metrics just miss. 250 isn't a ceiling, it's the launch pad.
And that is the optimism that creates bag holders. My closing argument is simple. The assets are likely unmined or encumbered. The 1.1 billion shares represent massive dilution that could crush the price to pennies, maybe 10 cents. You are relying on dark pool arbitrageurs and a military junta in Burkina Faso. This is a gamble, not an investment.
Okay, we can agree on one thing then. This is a binary outcome.
Absolutely. It is a zero or a hero. There is no middle ground here.
It depends entirely on that audit filing and the verification of those assets.
So for everyone listening, don't look at the PE ratio, watch the January 31st deadline, and watch that $2.50 technical level.
And decide if you believe in the pivot.
That's all the time we have.
Tread carefully.
If you like this video and want to watch more content like this, don't forget to subscribe to the Stock Market Palantir channel. Thanks for watching. See ya.